Hi there, this is Bill with smarttrades.com. Today is Wednesday, August 15th, and as always, if you would like more frequent updates, please visit me at smarttrades.com. I do send out daily updates via email as well as updates intraday via Twitter, and I'd love to have you join us so that you could get more frequent input on our analysis of the stock market and various stocks and commodities and so on. At any rate, up first here on the charts is the Dow, and as some of you will remember, we were looking for further rally about a month ago. At that time, we were down around this 12,400 area basis the Dow, perhaps a little above there, and had actually rallied back up. And we're talking about the possibility of this being A, and that we are working on a B wave. It should be followed by a C wave. If you prefer, we can call this X, Y, Z, i.e. it's a double zigzag up, and that's been my preferred count for some time. An ideal target for in this scenario, an A equals C, both in terms of the larger ABC and also in terms of the shorter term ABC, is around the 13,385 3,390 level, basis the Dow. And that said, there is some resistance before then, and it's likely that the market may actually react to the trend line before getting up to that upper target, if indeed it gets up there. As many of you are probably aware, there's government reports tomorrow on housing, jobs, and so on, and I suspect this very tight range that we've been in for the last week or more is going to get broken tomorrow prior to the opening. Whether or not that direction is going to hold on the breakout remains to be seen. And if we don't go to the upside, I would tend to go with the flow. And if the market broke down, I would look at the possibility that we've already peaked here. That said, very nice fractal type setup with this decline off of the late June high into the July low. You can see this rising, contracting type triangle, basically a rectangular shape with a rising bottom and a slightly rising top into the what I've got labeled here as point B. Interestingly, the sideways pattern coming into today, very, very similar on the short term. In fact, almost an identical pattern to this larger pattern in June and July. If we are to follow the fractal to the nth degree, what you would expect here is a couple of pulses to the upside and then a possible top. That fits pretty nicely with a peak around the 13,300 plus area, perhaps up to that 13,380 level. There is resistance before then, again at the trend line, and also around 13,255. And in fact, that may be the first level that we'll stop at on the first pulse up. Could be a couple of 100-point plus pulses from here if this smaller pattern works out symmetrically relative to this larger pattern in the Dow. You will remember that back in early July, we were talking about the possibility that this rally up was an A, that we were working on a B, and that a C wave would take us up to an ideal target around 1400, 1402, I believe, to be exact. That said, from there, we've actually, again, had that rising contracting pattern, and the termination point of the B wave has moved higher. With that in mind, an ideal A equals C takes us all the way up to around 1425 basis the S&P. Now, there's no rule that we have to reach there by any stretch of the imagination, but again, that was the actual projection all the way back. I think I mentioned 1422 in early July as a potential target, along with 1400, and also resistance at 1380 or so, and indeed we did have intermediate term tops around that 1380 level. And again, we're right now working out just above that 1402 target. At any rate, here's the idealized scenario. We'll see how it works out. One thing to keep in mind, that if we go above 1422, that negates this as a wave one down, and makes this much more likely a B wave rally rather than a wave two. Indeed, we've already rallied rather high for a wave two. It's unusual for wave twos to retrace more than 62 or 78%, and I tend to favor that this is a B wave regardless of whether we go up to 1425 or not. Just one other thing. Note the declining volume on the advance and also the declining momentum. To my way of thinking, this rally, both in the Dow and even more so in the S&P, certainly looks corrective. You've got declining volume, declining momentum, a choppy corrective style pattern. So even though we could get to 1425, I do believe that it's a corrective pattern rather than an impulsive one. So the next intermediate term move is likely to the downside. Here is a slightly different count. Looking at this last rally phase as a diagonal, that's a possibility. And again, we don't necessarily have to get to 1425 basis the Dow or over 13,300 in the S&P for this to be a corrective B wave type of rally. And indeed, you can see we've got a trend line not too far above the market, perhaps around 1411 tomorrow. And we have a negative breadth divergence basis the New York Stock Exchange advancing issues. They're making a lower peak so far, even though the market has edged higher on weak momentum. Nasdaq, possible 5 waves up. Again, this would count more as a classic ABC rather than the XYZ, if you will. Or WXY, depending which vintage of Elliott wave you'd like to use. Anyway, the bottom line is that I think we're near a termination, but likely the most likely scenario is that we're going to move a little bit higher before a peak. But again, I think the fireworks are going to start probably tomorrow on those the jobs and the housing reports. In my report, I had mentioned the other day that we might come up and retest this trend line, and in fact, this is part of this topping process here. As we go up, we test the upper channel and fail, and once again, you'll notice declining volume, declining momentum on the rally. Euro really in a hurry to go nowhere at all. It looks like the rally off of the lows has been corrective over the last several weeks, but the decline from the recent peak is also corrective, perhaps carving out a triangle or some kind of more complex corrective pattern for the euro. Bonds, interesting. We've got a possible 5 up. Wave 4 is rather large in comparison to the wave 2 that I show here, but you do have a triangulation in 4, which is classic. Moreover, we now have what looks like a confirming impulse to the downside. Resistance is going to come in up around, I believe, 149.10 or so, 149.08, and there is a possibility that we could go higher than there, but a very interesting area in that it's the upper end of this shelf, and also you can see we have matching lows and highs right around that swing level. So that's the first area to watch if we were to get a corrective rally. Again, going through there doesn't necessarily negate this peak at wave 5, because we could retrace certainly 50%, 62% typical in a wave 2 corrective rally. So no big deal if that happens. Natural gas, you will remember on multiple occasions on past reports we were looking for a rally, and indeed we've gotten quite a substantial rally, but from there we've carved out what I think best counts as an ABC up to the 320 plus area. That's also a previous resistance area. And indeed, we looked at that area for a possible peak in real time at smarttrades.com. And here's a shorter view, and you can see the market hit almost right on that upper channel. Interesting to note, this is similar to what's happening in the stock market right now. Same type of pattern, obviously, different price points and so on, but and some different details in the rally. But the basic scenario is similar, that what we're looking for is a loss of momentum and a test of that upper channel, and perhaps also another area of resistance. At any rate, in the natural gas, and this is a nice model to watch for, it's a perfect scenario showing a turn. Even if this turns out to be an ABC decline, you had a very nice impulsive decline off of that high above 320. From that decline to about 280, you had a nice ABC. Look at the way the market faltered at resistance. We had noted this 62% in this lower trend channel in real time, and the market indeed went up and tested. If you were to look at an even shorter term chart, you would see that it actually tested 62%, failed there initially, and then hit right on that lower channel, and forming a really nice ABC corrective rally. Typical 62% for a wave 2, and then another impulse down. Again, it's possible, and we do have some support down around the 270 level, that this is going to turn out to be an ABC decline. But the nice thing about Elliott and using channels of this nature is sometimes you can get some rather precise price points to trade into, and in this case the area above 320, and then that retracement to just above 310. I think we had 308 as our actual target. And anyway, it worked out pretty well. Again, smarttrades.com. If you'd like more frequent updates, I send out email updates just about every day. Also on Facebook, I occasionally update there as well. But I'd love to have you join me, and I really appreciate you tuning in and watching. And hopefully I'll get the next update out sooner than a month. But time is money, and unfortunately I've got other work to do. So thanks again for watching, and we'll talk to you soon. Have a great week. Bye-bye.